If you're trading gold ahead of the US election, I've got some golden tips to help you make more accurate trades in the coming months. Hello everyone, I'm Lien with BkTraders. Whether you're a newbie or a seasoned trader, it is very important to know that gold is seen as the ultimate safety net. And in times like this, a safety net could be important. Traders, investors, and central bankers all flock to gold to hedge against everything from inflation, deflation, to geopolitical turmoil, recession, and currency fluctuations. Now, while there's some debate about how effective gold really is as a hedge, one thing's for sure. In times of uncertainty, everybody loves a bit of gold. But first, if you're looking to sharpen your trading skills, be sure to subscribe to our channel for more tips like this. In this video, I will share with you some charts, some history on how gold tends to perform during elections and what you need to know. Now, one of the biggest uncertainties of 2024 is who will take the reins of the world's largest economy for the next 4 years. Will it be former President Trump making a comeback, or Vice President Harris making history? The political, economic, and social landscapes could shift dramatically depending upon who wins, which is why gold traders are watching the elections closely. And it's not just gold traders around the world. So far, 2024 has been a very good year for gold, with the yellow metal appreciating more than 12% in the first half and over 18% from January 1st to August 1st. Now, economic policies shape gold's direction more than political parties, but you have to understand that political parties also determine economic policies. It might seem like a Republican or Democratic victory shouldn't matter much, but history actually tells us a very interesting story. As you can see in this table that I created, gold has consistently rallied in an election year during each of the last 5 cycles, from 2004 to 2020. However, it lost value in the 5 election cycles before that. So what does this tell us? It tells us that it doesn't matter what political party the president is. Instead, it tells us that the demand for gold probably shifted since 2004, probably due to increased central bank buying from countries like China. So while the political landscape is intriguing, the global demand for gold plays probably a more important role in the direction of where it's headed than which party wins. We still have the benefit, though, of looking at how gold performed during a Trump presidency, specifically without the benefit of incumbency. Gold actually skyrocketed nearly 60% during President Trump's term. And while some of that can be attributed to COVID and the pandemic, did you know that over half of those gains happened before COVID hit? Interestingly, some reports suggest that gold tends to perform better 6 months before a Republican president is elected and actually stays flat after the election. But it tends to underperform before a Democratic president takes office. Specifically, gold actually historically has declined during the 6 months following both the Trump and Biden inaugurations, more so under Biden than Trump. Take it for what it's worth. What we as traders do know is that the factors that really matter to gold in the short and long term are actually the direction of the US dollar, interest rates, geopolitical, and recession risks. So while the political drama is fascinating, and all of us are sitting at the edges of our seats, these economic elements are really the true game changers for gold. Now, let's take a look at some charts to see what that really means. Check out this chart that shows the relationship between gold and the US dollar. The blue line represents gold, while the orange line represents the US dollar index. Historically, you can see that they move in opposite directions. No surprise there because gold is priced in US dollars. So when the US dollar rises in value, gold falls in value. And when the US dollar falls in value, gold rises in value. So it has a negative correlation. Now, let's add an election element. Vice President sticks to the US's strong dollar policy, whereas former President Trump thinks the US dollar is too strong and needs to weaken in order to boost exports. This means that come election night, it is likely to fall if former President Trump wins, and if Vice President Harris becomes the next president, we might see a knee-jerk rally in the greenback. However, it will not be long before investors shift their focus back to what really matters, what really drives the market, which is interest rates. Take a peek at this chart showing the relationship between gold, which is the blue line again, and the US 10-year Treasury yields, which is the gold line. Notice how they move in opposite directions as well. When US Treasury yields go up, gold prices tend to drop. And when yields go down, gold prices tend to rise. So as a gold trader, it is crucial for you to watch treasury yields, especially if you're a day trader, because they really matter. Here's a pro tip. Avoid buying gold when US yields are up 1% or more, and don't sell gold when US yields are down 1% or more. Now let's talk about the possibility of a year-end December interest rate cut after election from the Federal Reserve. Such a cut would probably drive yields lower and the US dollar lower, perfectly aligning with Trump's weaker dollar policy, which means that if Trump is elected, we could see a more significant and durable sell-off in the dollar than if Harris wins. If Harris wins, we'll probably see a knee-jerk dollar rally, but that will probably be short-lived as investors quickly refocus on the likelihood of interest rate cuts. So keep your eye on those rates. We at BK are watching these developments and stories every single day. And if you want to learn how to stay on top of the markets with us, check out the description below this video. Now, geopolitical risks are basically an ever-changing drama that, is very difficult to handicap. And that both candidates, whoever they are in terms of who becomes next president, will have to face the same geopolitical troubles. Now, if Trump is elected, he's likely to face a more polarized world than during his previous term, making global markets more sensitive to his foreign policies, like how he feels about NATO. And we know that he has a distaste for NATO. While geopolitical risks are tricky to predict, the market impact is usually short-lived. That's the most important thing to remember. So keep an eye on the stock market instead. If stocks crash due to geopolitical or economic reasons, like a global slowdown or a recession, gold will shine. The following chart shows a more complex relationship between stocks and gold. But when the market takes a nosedive, gold tends to rally. So if Fed Chairman Powell is right and that a hard landing can be avoided, there may be less of a need for investors to turn to gold as a hedge. The same is true for inflation. If it eases like central bankers anticipate, then gold demand could decrease as investors don't need to hedge so much against inflation with gold. The recent twists on the campaign trail, such as the assassination attempt on President Trump and President Biden stepping down from the race, certainly has ramped up the uncertainty ahead of the election. With these developments, many of you are wondering, what's the impact on gold? So my advice is to keep a watch on the polls, but watch also where interest rates are headed, watch where the US dollar is headed, and watch how the stock market is moving to get a clearer picture of where gold might be headed. For my traders out there, remember, it is always better to look for setups in the direction of the fundamental trend than trying to pick tops and bottoms and trying to fade it. Keep this in mind when analyzing fundamental stories, and you'll be better positioned to make smart gold trades. If you found this video helpful, please give it a thumbs up, subscribe to our channel, and hit the notification bell for updates so you never miss another video. Happy trading, and I will see you all next time.